We've got some very important breaking news today regarding Voyager Digital stock that has unfortunately sent the stock cratering down 13%. If you look at the 5-day chart here, you can see Voyager has fallen off a cliff back down into the $5 range. And this is the result of a cease and desist order that they just received from the state of New Jersey. Now, Voyager Digital has, always prided themselves as a rule follower. They've avoided these types of issues historically, while some of their competitors have faced immense scrutiny, like Binance and recently BlockFi faced a similar issue when they were hit with a huge fine and forced to stop their practice as well. So it seems Voyager is not immune either, as they're going after them now. So we've got lots to break down here. I just want to hit on a couple quick interesting quotes I thought were interesting from this article, and then we're going to take a look directly at the order from the New Jersey Bureau of Securities. So New Jersey's move is just the latest in a series of orders and complaints against crypto-based interest-bearing account issuers in the US. So the New Jersey Bureau of Securities has issued a cease and desist order against Voyager Digital for selling unregistered securities through its Voyager Earn program. The order claims that each of the crypto staking and lending accounts issued through the program since 2019 are unregistered securities because of their promise of interest rates as high as 12%. Now, Voyager has taken steps in the past that I think they thought would safeguard against this by saying that these were rewards, that it wasn't all earning interest, it was more so you were just getting these rewards. But clearly New Jersey was looking at it differently, and this paragraph here really gets me. The Bureau cites as evidence for the claim messages on Voyager's homepage encouraging users to grow your portfolio and journey to the new frontier of investing. I guess we're not allowed to use language like grow your portfolio. It's illegal. You can't grow your money. And journey to the new frontier of investing, also not okay. Didn't Matt Damon say that in the Crypto.com commercial during the Super Bowl? Sir, we got to lock up Matt Damon. We're not allowed to journey to the new frontier of investing. I think that this is just the latest case of being too early to the party. Crypto, interest on crypto, it makes a ton of sense. I stake my US dollar coin on Voyager and I'm earning 9% interest, at least for now. Who knows for how much longer. But I think what's really criminal here is, not allowing this, because in your savings account, you're actually earning negative 7% interest when you factor in inflation. So that's the real crime, I think, that I see being committed here. But anyway, I digress. Let's carry on and see what this is all about. New Jersey claims that about 52,800 accounts and $187 million in assets are from users in the state, out of roughly 1.5 million active accounts and $5 billion in assets on Voyager in total. It's crazy to see how quickly Voyager has grown. And while only 52,800 of those total 1.5 million accounts are in New Jersey, it is a pretty significant number, and this is not going to be the last state that we see this happening in. So definitely cause for concern. In the short term, Voyager's marketing tactics were also criticized. Voyager's marketing tactics were also criticized, with the regulators stating promotions for the program failed to disclose that Voyager's parent company, Voyager Digital LLC, is a publicly traded company in Canada, not the US. I don't really see how this is relevant. The order claims that this creates a misleading impression with respect to Voyager Digital LLC's regulatory status. The Bureau also alleges that while Voyager claimed to be licensed, it was only licensed in some states to act as a money services business. The Bureau states does not allow for the sale of unregistered securities. It added the claim may convey the misleading impression to unsophisticated investors that Voyager is licensed to offer and sell such securities. And New Jersey is not the last. At least 5 other states, Alabama, Oklahoma, Texas, Kentucky, and Vermont, have slapped Voyager with various orders or demanded the company explain how it is not issuing unregistered securities if it wishes to stay in business in their respective states. So this seems like the beginning of a painful period here, as New Jersey is not going to be the only state that they're dealing with these issues in. Obviously, we know back in February, BlockFi was hit with a similar cease and desist order from Washington State and a $100 million penalty for selling unregistered securities in the form of interest-bearing accounts. So while Washington State, we were just talking about in the last video, very progressive on electric vehicles and banning the sale of ICE vehicles by 2030, and why I thought that was, great news for Tesla. Obviously not good news we have here for Voyager, so they're not totally on board with all of these new initiatives. Crypto is really having a rough time. I think it's a tricky period here we're in. It's kind of like you're too early to the party. I think that these initiatives are genius. Being able to stake your crypto and earn interest, I think, is a great tool to build wealth, but it also makes sense that these are just such new and foreign concepts to regulators that it's going to take some time for it to all become intertwined into our financial markets and completely adopted and approved. It's also interesting, last September, the SEC threatened to sue crypto exchange Coinbase if it launched its long-awaited Coinbase Lend program. It would have resembled BlockFi and Voyager's interest-bearing accounts for crypto lenders. At the time, Coinbase CEO Brian Armstrong called the SEC's behavior really sketchy, as the threat came without any legal overtures. Again, I really don't see the problem. I think that it's, they make it very clear to you what you're getting yourself into when you do lend your crypto on these platforms. I know personally I'd rather earn 9% interest on my US dollar coin than watch my money's value erode in my savings account where it gets no interest. So here's the actual cease and desist order from the Attorney General of New Jersey. Today's action says loud and clear that the cryptocurrency securities market is not the Wild West, and investor protection laws absolutely apply. Through efforts like this one, we continue to hold accountable all those who threaten the integrity of our financial industry and place investors at risk. All right, let's relax here. With the rhetoric is very interesting, because I could just as well make the argument that protecting the financial industry isn't robbing everyone who has a savings account 7% to inflation. But we're walking a fine line here, and it's an interesting period where a lot of crypto is becoming regulated, which is bullish, I think, for the industry, because it's going to be necessary for it to stick around. It has to get approved. But it's almost like some of these initiatives, like the interest bearing, is a little too radical, maybe a little too early. But I mean, I think it's all great for the long term. Short term, it's a big risk, and this is why investing accordingly. Voyager Digital, while I love the platform, I've been very happy with the service, and I am a stockholder. It is one of my smaller positions. I have about 800 shares of Voyager Digital. It's one of my small, speculative positions, because as great as it seems and as fast as they're growing, stuff like this can happen any day. When you're in this brand new pioneering industry, there's a lot of risk, a lot of unknown unknowns, and these things can just come out of nowhere, as we're seeing. So, got to be careful. And again, this isn't the first time this happened. They issued a similar cease and desist order against BlockFi. The company had to pay a fine of $100 million, including $943,000 to New Jersey, because the government is the best capital allocator of all, of course. They also issued a cease and desist order back in September of 2021 against Celsius Network. The rules are clear. Anyone selling securities in New Jersey, they say, must comply with the state security laws. Our Bureau of Securities will continue to protect investors by monitoring the marketplace to ensure everyone is following the rules, especially when it comes to the ever-evolving cryptocurrency market. So I'm curious, let me know what you guys think down in the comments. Do you think that you as the investors need to be protected, or are you capable of making your own, investment decisions here? Do you think that they're doing the right thing here? Why or why not? I'm curious to hear other people's thoughts. I mean, like I said, personally, I just feel like this limits people from, an opportunity to make money. Like US dollar coin, I'm earning 9.5% interest for now on Voyager Digital, which is great. I don't put all my savings in there, but I put a little chunk of it. And why not? I'm comfortable with the level of risk, I've exposed myself to with cryptocurrency. It's a very small part of my overall investment strategy. Very, very small. Unregistered securities offerings pose significant risks to investors because the issuers do not make the same type of disclosures, including, for example, providing detailed financial statements that typically accompany registered offerings. So again, let me know in the comments below. I mean, do you agree with all this rhetoric? Do you think it's necessary, or do you think it's an unfair clampdown on a new industry with an innovative new way of making money, both for the companies and for the investors and the people using the platform? They continue here. Investors in unregistered offerings like the Voyager Earn program accounts addressed by the Bureau's order today may not receive any information about the specific investment strategies used by the issuer to generate investment returns, may not be advised about the creditworthiness of counterparties with whom the issuer does business, and may not be apprised of the use of leverage or other risky investment strategies employed by the issuer to generate a return. In contrast, registered offerings typically provide detailed information for investors to make reasonably informed decisions about the level of risk particular investment entails. So it is interesting. Just a few things come to mind. I know that there's other platforms like Fundrise where you're basically doing what Voyager does with crypto, but with real estate, you're pooling money together. But it just seems to me, things like Lending Club, there's so many other platforms that are doing the same thing, but it just seems like whenever it comes to cryptocurrency, is when it becomes a huge problem. And they keep talking about cryptocurrency as a security, and I don't know that crypto is really going to be the same as a security. I think it's, again, this is a new asset class that I think we're just a little too early to the party. It's a little bit too innovative. The policymakers just can't really wrap their heads around it yet. I just don't really understand what the difference is, whether you're earning interest on crypto or you're earning interest on lending in other capacities. According to the Bureau's findings, Voyager solicits investors to invest in the Voyager Earn program accounts by depositing certain eligible cryptocurrencies in the investor's Voyager account. By the way, you can turn off the interest earning part of Voyager at any time. They don't force you to do this, so you have the choice. I feel like it's pretty clearly laid out. Voyager then pools these cryptocurrencies together to fund its various income-generating activities, including lending operations, digital asset staking, proprietary trading, and investment in other cryptocurrency trading platforms such as Celsius Network. In exchange for investing in the Voyager Earn program accounts, investors are promised an attractive interest rate that is paid monthly in the same type of cryptocurrency as originally invested. And I do think this segment here, this is problematic, that it's not protected, it's not insured. Digital assets in the Voyager Earn accounts are not protected by the Securities Investor Protection Corporation. They're not insured by the Federal Deposit Insurance Corporation or insured by the National Credit Union Administration. So that is a risk to it. And again, I think that that's something hopefully we can see one day. I mean, that is one area that makes sense. Your bank account is protected, insured up to a certain amount if the bank were to go bankrupt. And that's not the case for these crypto brokerages, which that's definitely a risk. I guess of all the arguments, this paragraph here kind of holds the most water. Platforms like Voyager offer interest-bearing financial products that may mirror the traditional financial structures we know and trust, but their lack of a protective scheme or regulatory oversight subjects investors to additional risks that they wouldn't experience with banks or savings accounts. And what do you guys think? Like, where do we go from here? How do they earn that trustworthiness and really get approved? I'm sure that these things will come over time. Maybe they did just jump the gun a little bit here and jump into this a little too soon. I've loved earning the interest or the rewards on my Voyager platform, on my cryptos. It's just another source of passive income for me, which I'm all about. I love getting my dividends. So far, Voyager is under scrutiny in at least 7 states, including obviously New Jersey, Alabama, Oklahoma, Texas, Kentucky, Vermont, and Washington. And Voyager did respond, basically saying they're aware that they've received these orders. They're in talks with the regulators to better understand and clarify the statements that they believe are inaccurate. When effective, the orders will stop the firm from offering new accounts or accepting new assets for its Earn program. The company expects to receive a transition period before the orders come into effect, and Voyager stated it's firmly convinced that its Earn program and the Voyager Earn accounts are not securities, which they've stated before, and intends to demonstrate its position and defend it as necessary and appropriate. Of course, Voyager supports appropriate regulation and will do its best to demonstrate to these regulators that Voyager has complied with the law the company set. So let me know what you guys think in the comments below. Do investors need these added protections, and is Voyager really putting them at huge risk here that is worth, being shut down? Do you think that this cease and desist order is fair? Did Voyager and these other crypto brokerages overreach by offering interest in their accounts and not making it clear to investors? Let me know your thoughts in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.